Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about EURCAD because we do have quite interesting price action and structure. First, I will be covering the technical side, then we will go and see what we have from an order flow perspective, so the commitment of traders. Now, starting here from the monthly, what do we see? Now, from a monthly perspective, we can notice how the market at the moment has just created an inverted head and shoulders. We have the left shoulder here, the head here, and the right shoulder here. So effectively what we have is a rejection of very strong previous monthly support, which was broken to the downside and broke back above, confirming a fake breakout to the downside, which effectively is the head of the inverted head and shoulders. Then we had a retest of the previous support, which at that point was once again acting as support, and a rejection to the upside. At this point, this creates a new structure level, which is this previous high, which is now previous resistance, which if the market will manage to break above it, from a monthly perspective would be acting as previous monthly resistance turn support, which at that point we could expect the market to test and reject to the upside. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how the market is currently testing previous weekly resistance, which is now turned support. We can also notice that since we have an impulse and the market has now started a correction, we can measure the correction by taking our Fibonacci from the low to the high of this impulse. And if we do that, we can notice how we have the 0.32 and 50% Fibonacci retracements lining up inside of this previous resistance turn support, creating a confluence of support at this area, which we could in fact expect the market to test and then to reject to the upside. Going down on the daily time frame, what do we have? Now, from a daily perspective, we can notice how at the moment the market is creating an M pattern. Now, in general, after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside, to go and complete the M pattern at the neckline, which is the previous support turned resistance. So here on the daily, what we could expect is a little bit more bearish price action, but overall, we would like to see a rejection higher and completion of the M pattern at the neckline. So what could definitely be a possibility is for the market to go and test the support that we have identified on the weekly time frame and then to reject to the upside. That would be perfect because it would also create a nice M pattern here on the daily, which at that point would need to complete. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are the big players in the market, and we check the data for the CAD, we can see how the CAD has been getting quite negative. We went from plus 26k net positions all the way down to minus 12k net positions. So the CAD is getting weak, which is exactly what we need for EURCAD to reject to the upside. The euro on the other side is getting very strong, going from minus 47k net positions with 249k shorts and 202k longs, so more shorts than longs from an institutional perspective, to now having plus 112k net positions with 239k longs compared to only 126k shorts. So the euro is getting very bullish, while the CAD is getting weak, which is exactly what we need for EURCAD to reject to the upside. So if the market here will actually create this M pattern, at that point, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries. At that point, we could be looking for a potential rejection higher and completion of the M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and those kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge discount on the lifetime access price of the mentorship program, so one-time payment for lifetime access. And if you scroll lower, you will see that there is still time to join before the timer goes to 0 and the offer expires and the price goes back to normal. However, spots are limited, so if they get filled before the timer goes to 0, the offer will end anyway and price will go back to normal. So I really suggest that you take advantage and join directly from here and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.